It is the end of 2025 and the start of 2026. I wanted to take a moment, first and foremost, to say thank you all for everything we've been through this year. Transitioning to the RIA and just continuing our relationship has meant a tremendous amount to me. As we look back at this market recap, there's a lot to unpack within 2025. And then we'll look into 2026, both from an economic standpoint, market standpoint, and give you a little bit on the firm. All that being said, let's get into the year that was 2025. Started out with Trump coming into the presidency, and fairly early on, we had a somewhat steady market until very early April, which was Liberation Day, so quoted by Trump, and the tariffs that were talked about for basically the first half of the year, and has since died off to an extent, primarily because the market rebounds so steadily. But that Liberation Day led to an over 20% drop in the market, and a fairly corresponding rebound once some of that was unwound or some of the phrasing was changed up a little bit. But that was kind of our first thing of the end of Q1, start of Q2. As we got into there, a lot of the conversations became about AI CapEx spend. And so these large technology companies, so you're thinking your Googles, your Metas, your Alphabet, whoever it might be, that is a mega cap technology company, is trying to win the race of AI. It's AI or die. And we feel that not just on those mega cap tech companies, but also in a bit of a battle between the US and China. Okay, and so we'll talk about that in a minute. But CapEx spend was tremendous. I mean, these companies, which have significant cash flow, were continuing to take that money and plow it into. And that really bolstered a lot of the rest of the market, because that trickled down to construction companies that are building up data centers. It trickled down to energy, meaning that all of this data that we need, all of this processing that we need to do in order to support AI has drastic energy spend. And what's amazing about this, one of the clearest examples of how powerful this is all of a sudden nuclear comes back into the picture, and I mean really takes massive leaps forward as far as getting approved. So again, obviously nuclear has been a taboo subject for quite some time now, but now we're not even kind of questioning as it goes, and is being considered to be used in order to support this AI push. There's still a lot of questions around AI, and a lot of doubts. There's a lot of talk of unemployment as well around it, and that it's replacing jobs. There's some conflicting notes there. We would say most of the unemployment is more related to the glut in government jobs that had happened over the past 4 years or so, where we really were bringing in government jobs that weren't necessary, and that was the DOGE part of this year, right? Department of Government Efficiency with Elon Musk, and really they came in to kind of chop a lot of that off, and we've experienced that more soon or more this time of year, more end of the year than we were earlier in the year, because there was a stipend given, or they were given so long to make a decision and take a payout as opposed to continuing to work. So we're seeing some stress there. We're seeing some overall doubt around AI, but our argument would be most people have been using it in some way, shape, or form, or most companies have made it so easy. So when you go into a Word document, now you have Copilot from Microsoft. ChatGPT is being used by hundreds of thousands, millions of people on the on the daily, and some of those people are using that for bits and pieces, right? And some of those people are using that for everyday decisions. Everything is being put into our day-to-day lives, and that's actually a good note for our note on cryptocurrency. So cryptocurrency had a wild ride this year, up over 30% at one point this year, and now actually down on the year. And my continual argument for cryptocurrency, and why I still think that it is a good buy and there's still a lot of opportunity there, is that will continue to be put into our everyday lives. So a difference is AI has done so fairly seamlessly. Cryptocurrency still needs to be eased, but cryptocurrency has already, groups like Robinhood or Coinbase are implementing these things in a much more smooth and efficient way than 10 years ago, when you had to do a cold wallet and you had to use, you had to pay gas fees to go back and forth. Now there's still processing fees, but related to traditional finance processing fees, these numbers are still down. And my argument is still, if we can do something easier, cheaper, and more secure, why wouldn't we be headed towards that future? So that'd be the argument for cryptocurrency. That's another large note for this year. The other larger note for this year would be precious metals. So gold had a continued climb, up 30% again. It's had 3 years of massive growth. But maybe not as highly touted, but certainly seeing a larger buildup is silver, up well over 100% on the year. And it had a drastic slingshot back, within the ratios of gold and silver. And so now our top 3 items of market value is gold, Nvidia, and silver. So silver had a massive swing up. We've been talking with clients about this for a couple of years now. Now might be more of a time to sell some of those precious metals as opposed to buy them, but that is very much a case-by-case decision. So do want to make the note. I mean, it certainly is, silver in particular is one of the top performers of the year. Now, that is the year of 2025. The year of 2026, what we're looking ahead at is we want to be mindful of what the narrative out there is right now. So first and foremost, 3 years of gains, double-digit gains in the overall stock market. This year we're at 16 to 17%, or 2025 we're at 16 to 17%, and so almost certainly we will see some selling off at the start of 2026, and generally that's caused. So when people have taxable accounts and you have gains through there, so you'll kind of wait until the start of the year, trim your portfolio from the gains that you might have, because you might have had some fairly significant run-ups in the year past, and then you can plan ahead for the tax that you owe on that. So as opposed to doing it at the end of the year, you do it at the start of the year or of the following year. So I anticipate that's going to happen again. I think that was happening, or part of what was happening at the very end of 2025 is that people were taking some of that gain prior in order to try to beat that ahead. So we want to remain patient with our rebalancing, remain patient with any bigger adjustments that we want to do, into maybe late January, start of February. Now, again, that's anticipating that we're going to have another decent year. And if we look at the analysis and the reports coming from the economists across the various banks and across the various financial services institutions, they're projecting anywhere from an average of 8 to 10%, and that's about where they land every single year. That is not earth-shaking. It's not going to move any significant needles, but it is something to note. And on that note, this is a chance when our firm wants to reiterate, that is our usual average, so 8 to 10%, right? So the S&P 500 has returned basically since its inception 9.9%. Okay, now only in about 8 or so years of the entirety of the stock market has it ever been within 8 to 10%. So usually we're up above or we're down below. Okay, so again, 2025, 16, 17%. The years prior to that, you're up over 20%. Okay? The other side is if we're down on a year, usually it's more drastic than that. The arguments for us having a down year in 2026 would be that the AI hype is overhyped. Maybe that we're in a bubble, though you are hearing less talk of that. Or unemployment will gain momentum, and as people don't earn, a proper check anymore, they will spend less. If they spend less, our economy will drop. If our economy drops, the market drops. So there are some good arguments there. However, our firm believes that this AI innovation is, almost like an industrial revolution or the dot-com, revolution. It is going to change our world. And there's a lot of fear in that, right? People losing jobs, companies just prioritizing more profits as opposed to, quality or whatever it might be. And we believe that there is still a tremendous amount of spending to happen there. There is not full frothiness that might be seen closer to the top. Now, again, we're not going to time the top. We're going to try to make small discipline changes. Mid to end Q1 is the current plan. Maybe take some of the gains from our larger positions through 2025, some of those positions that were up a fairly tremendous amount, and try to position for continued growth. But again, we are on long-term growth, not making drastic swings in the short term. So we want to keep that in mind. We're still hopeful for what 2026 can be. That being said, we are, as we financial plan, we are ready for when things are down. We are making, again, we want to make sure that you're educated through that and knowing when to sell and what reason, what are the good reasons to sell. So one of the common points that we're also going to bring up is we want to always find the right buys as we're growing our wealth. And we don't want to sell until we have to. Now, that have to sell might be just taking distributions in retirement, or hopefully it's a better opportunity of buying maybe some real estate, or buying a car you always wanted, or buying something that means a lot to you. But we don't want to sell unless we have a clear plan forward. So we do want to make sure as we get into 2026, we're going to be fairly active in trying to get either in front of you or get you out to our lovely new building, so we can sit and have a chat and catch up and make sure that we are prepped and ready for what's ahead as best we can be, and that we have a firm grasp, a firm understanding of what is ahead of not just the U.S. economy, the global economy, but you in particular. Well, I thank you guys so much for watching this. I look forward to seeing you guys in 2026 and showing you or introducing you to our new guys. And I'm really looking forward to sharing more with you and hopefully providing more resources to educate you in 2026. And it should be a pretty darn fun year. So thank you guys so much for watching, and I look forward to seeing you in 2026.